Okay, welcome everyone, and thanks for joining us today. I am Mary Kane, and I'm the President and CEO of the Maryland Chamber of Commerce. Maryland businesses are about to face a major change, a new 3% tax on data and IT services that will go into effect on July 1st. Whether you're in tech, consulting, media, or professional services, this tax may affect how you deliver services, generate revenue, and structure your contracts or pricing. And that's why we've partnered with the Comptroller of Maryland's office to bring you this important webinar. Our goal today is to help you understand what's in the law, how it will be administered, and what your business should do now to prepare. Today, you will hear directly from the Comptroller's team, get clarity on compliance, and have the chance to ask questions ahead of the July 1st deadline. But before we get started, there's just a few housekeeping items. Today's session is being recorded and will be sent to registered attendees. There will be an opportunity to ask questions, so please submit them through the Q&A box. And the Comptroller's team will do their best to respond during this webinar. And very importantly, as this new law goes into effect, both the Maryland Chamber and the Comptroller's office need to continue hearing from you. Your insights are essential as we work to fully understand how this tax affects businesses and as we continue to advocating for the practical, workable solutions that support Maryland's economy. Now, I'm pleased to introduce our speakers from the Maryland Comptroller's office. We have Matt Dudzig. He is the Director of State Affairs. We have Deborah Gorman. She is Director of Legal Division. We have Krista Sermon, Deputy Director of the Legal Division, and Michelle Mitchell. She is the Maryland Tax Connect Program Manager. Matt, Deborah, Krista, and Michelle, thank you very much for taking time to be with us today. And the floor is now yours.
Great. Thank you all, and I'll be very brief because I think that the folks you mostly want to hear from today are Deborah and Michelle. But again, I just want to echo what was just said. We are really relying a lot on outreach from the business community as we sort of tailor our guidance to make sure that we can address the most relevant questions that are coming up among the business community. So I really appreciate the opportunity to be here today, and won't take up any more of your time. I'll just bounce this over to Deborah.
Thank you, Matt. Good morning, everyone. I do want to thank you for joining this event this morning so that we can discuss the state tax updates from the 2025 session of the Maryland General Assembly. Just a couple housekeeping items to start. I did put into the chat a link to our Comptroller website where we have a dedicated page that we have created that we are posting all of the information that we're talking about today. This includes draft regulations, some other guidance. We will be posting questions and answers that largely we have worked to collect since the beginning of, I should say, since the end of session and the beginning of this interim period before the implementation deadline in July 1st on these things. But we're also able to add new questions and answers. So if you hadn't submitted something previously, but there's something new that you either have today or even something that you, that comes up in the next few weeks, if you want to reach out to us, we are able to continue to add new content there. So we'll also just remind folks, please do not include any confidential or any proprietary information in either the Q&A or the chat. The answers that we're going to give to questions today will be as specific as possible, but I'd like you to just keep in mind that it is, they are guidelines, they are general guidance. If, for example, at some point there would be an audit of a particular transaction, they will look at any applicable documents or contracts applicable to that transaction. So we can't, of course, answer every possible scenario today, but we're going to do our best to give you strong guidelines to help you navigate these changes. So with that, I will start with our presentation here. And we're going to go straight to the data and information technology software services and talking about what is exactly taxable beginning on July 1st, 2025. We are going to then talk about who has to collect the tax, who pays the tax. We're going to talk about the effective date and how that really can impact contracts, subscriptions, etc. And then we'll also talk about some special situations, including exemptions. And then at that point, I will turn it over to my colleague, Michelle Mitchell. She is going to talk to you a little bit about Maryland Tax Connect and the ins and outs of how sales and use tax accounts work on that platform. Maryland Tax Connect is our platform for filing and paying taxes, but we also have registration services available there. And then I believe we are going to migrate into a Q&A portion of the presentation. So, all right. What is taxable? As Mary mentioned, what we have beginning on July 1st are new taxable services that will be taxed at the 3% rate. Statute talks about data or information technology services that are described under NAICS or NAICS, sectors 518 or 519, and subsector 5415. And then also system software or application software publishing services described under NAICS subsector 5132. And these are what are subject to the sales and use tax, again, effective July 1st, 2025. The services subject to the tax, as I mentioned, they're defined by reference to these NAICS sectors. NAICS stands for North American Industry Classification System. The statute is specific. It refers to the 2022 edition. And a service that meets this definition, a service that you may be providing or purchasing, if it meets these definitions, then it's subject to the tax, whether or not a business may also use those sectors when reporting their primary business activity codes, say on a tax return, regardless of what the NAICS sector may be identified in terms of an overall procurement or contract. Really, the inquiry is to look at each service that's being delivered individually to determine taxability. You can go either to our website where we have information. We are not assuming that folks are going to be able to know or necessarily navigate the census website, but certainly if you like to, you may. You can visit census.gov/NAICS. You can enter the appropriate code in the search field for more details. I'll talk about more about our information that we've published, but I'd like to walk through that NAICS scenario for folks who are interested in seeing the original content. And this is sort of how the legislature envisioned it. So you'll see there at the bottom of the screen, there's a little snip, and that's the one you're looking for. We are looking for the 2022 NAICS search, and that's what the box looks like. The next, if we, just using an example, if I had entered subsector 5415, which are part of the data and IT services here, what's now on the slide, you'll see the results of that search. And you'll see here a bunch of subsectors that are listed. Those are included in any sector or subsector, includes the ones that are subordinate to it. And each of those items that I've highlighted is a link to more information. So now if we were to click on the link for the subsector 541511, that was the custom computer programming. And then you see here on this slide, the list of all of the activities that are included. So if you're using the census website, that's what you want to do. You want to drill down all the way so that you are getting the most detailed information as far as these activity descriptions. As I said, to assist the taxpayers, we've also taken all of these activity descriptions, not just for this particular code, but for all of the codes referenced in the statute that are in the bill. We've listed them in our emergency regulations, and we're also including those in other guidance that's available on marylandcomptroller.gov. They will also be part of the instruction for the sales and use tax form, the 202. so that people will be able to see. It's quite a long list, as you can imagine. Like I said, this is just one, but it's important for people to see the full list, I think, in trying to determine if the service they are providing or purchasing is in fact subject to the tax. We have had some questions about what qualifies as an IT service versus what is a digital product. So again, we ask you to check the list of services either on our guidance or on the census site, and make sure if you are using the census site, again, to use that 2022 edition. Just an example here from this list, if you're charging for packaged computer application software, then as of July 1st, 2025, you are providing a taxable service. Can you rely on a code if it's being used on another context, such as on a tax return? No, you should not do that. You want to, again, check the list of services. Do not rely on codes that you've been using for years without checking them. For example, if you do a quick web search for software publishing, you're going to see a lot of results for subsector 511210 software publishers. However, code 511210 is no longer a valid NAICS code in the 2022 edition. Instead, software publishers are now under 5132, which is included in the statute. That 5132 is the appropriate code for the 2022 edition. So again, make sure you're using the current information, and you're going to look to see what is the actual activity definition. Are you charging customers for any of these listed activities, or are you purchasing these? Next, we'll see who must collect and remit the sales and use tax. The legislature did not change the foundational sales and use tax laws that we are all familiar with when we buy tangible goods. What they did with this update in the BRFA is expanded the base. They've added new services to the already existing list of taxable services. That's important to understand in terms of applying the existing law and the regulations. The Comptroller's office is not breaking any new ground here, so the same underlying sales and use tax principles apply whether you're selling t-shirts or you're selling technology. What we are trying to do with the Comptroller's office is to assist folks in industry, practitioners, taxpayers to understand how those existing laws apply now that the base is expanded to include the sale of data or IT services and also software publishing services. In Maryland, the law refers to sellers as vendors. Vendors are who are selling or delivering either tangible personal property, digital codes, digital products, or taxable services in Maryland. They must register for a sales and use tax account. And they're required to collect the sales and use tax on a retail sale unless some exemption applies. We've got a few categories here of vendors that are required to collect the sales and use tax. I wanted to give examples. So an in-state seller who's selling to a Maryland buyer, the seller has to collect in that case. If there is an out-of-state seller who has physical presence in Maryland selling to a Maryland buyer, their obligation to collect is also there. An example of that would be someone who has employees or contractors performing a service within the state. And then there's another category of remote sellers. These folks have no physical presence in Maryland whatsoever, but are selling to a Maryland buyer. In that case, the seller has to collect if they meet certain thresholds for nexus with the state of Maryland. Specifically, they have to collect if during the previous calendar year or the current calendar year, the vendor meets the following criteria. They either have gross revenue from the sale of tangible personal property or taxable services delivered into Maryland exceeding $100,000, or if they make sales of tangible personal property or taxable services for delivery into Maryland in 200 or more separate transactions. Now, that's not with a single customer. That is in total, all business activity into the state. Exceeding those thresholds will require a remote seller to collect Maryland tax. An example of a situation where a seller is not having to collect the tax, if you have a vendor who is based in Maryland, a Maryland business, who's making a sale to a customer that is 100% outside of Maryland, you do not need to charge the Maryland sales and use tax. Now, you'll need to check with the rules and regulations in that other state. It's possible that the buyer's state may have something similar to what we have here with the remote seller thresholds. You may also hear those referred to as Wayfair thresholds. That name just derives from the Supreme Court case, which decided those nexus issues that can require someone who's outside of a state to have to collect if they're making sales into the state. So you'll want to check on the laws in that particular state. But as a general rule, you do not have to collect Maryland sales tax just because you're a Maryland business if you're selling services outside of the state. Some other high-level general information, and for folks specifically who may not be familiar or have not collected sales and use tax before, all vendors have to have a sales and use tax license. That can be obtained by completing a combined registration application on mdtaxconnect.gov. There's no fee to apply for a sales and use tax license. It is free in Maryland. And as I said, Michelle will talk you through some of that once I'm finished here. Give you some specific examples. A vendor is a trustee for the state. And so therefore, they're liable for collecting the sales and use tax for and on account of the state. That is a legal obligation. The tax is generally due at the time of sale. Vendors have to file a sales and use tax return and remit the payment that is collected on or before the 20th of the month following the month when the sale is made. To assist vendors in their obligation to collect the tax, the state offers a credit is available, 0.9% of the gross amount of the tax remitted, up to a maximum of $500 per return, as long as the sales and use tax is remitted on time. So that is a little bit to help defray the costs of compliance. And then also interest and penalty apply if the tax is not remitted timely. Additionally, there are certain officers and individuals who can be held responsible, who are responsible for payment, can be held personally liable if the sales and use tax is not remitted to the state. Next, I wanted to show a couple of snips. This is the updated, these are from the updated sales and use tax return, which is Form 202. That reflects the new taxable services. And I apologize, I understand it might be a little bit blurry on that snip. I did my best, but wanted to blow it up so folks could read it. The takeaway here, though, is that there are brand new lines for reporting. On line 16 is to report the sales, the total sales of data and IT services, as well as software publishing services, and then also the actual tax that are collected. And then taxable purchases of these services for use, where the tax was not paid to the seller. Those are reportable on the new line 32. The reason we show you both, a business can be both a seller of services and a buyer of services. You'll report the use tax in instances where the sales tax is not paid to whoever you're buying from. Which brings me next to who is paying the tax. It's the buyer who's responsible for paying the sales and use tax, and they're typically paying that to the vendor, who, as we just talked about, is collecting and remitting it to the state. In an instance where a vendor fails to collect the sales and use tax, if a buyer is using the tangible personal property, the digital code, digital product, or the taxable service in Maryland, then they are responsible for remitting use tax to the state. So an example where a vendor might not collect the sales tax, we talked about, for example, a remote seller who might be outside of Maryland. And let's just say, for instance, they do not meet those Wayfair thresholds. So if they sell less than $100,000 of services into the state in a year or have fewer than 200 transactions, um, then they would not have sufficient nexus with Maryland to be required to collect the Maryland sales tax. But nevertheless, if your business is in Maryland and you are purchasing those services, so if you're not charged sales tax on the invoice, then you're responsible for remitting the use tax for use of that in the state. And so again, if you do have that use tax obligation, line 32 is where that's going to be reported. I want to talk now, again, just a reminder, these are for guidance purposes and details do matter. But some of the effective date and impacts on contracts and subscription type questions that we've gotten. So first, contracts for sales of digital or IT services and software publishing services that are entered into prior to July 1st in 2025 are not subject to the sales and use tax. We do ask that proper records should be maintained regarding the date and the terms of sales. If in fact no sales and use tax is collected, however, that the delivery or the payment is going to take place after July 1st, 2025. Tax is, however, due on subscription, lease, or other similar periodic payments that are based on a subscription period. Now that's regardless of the length of the subscription or lease or the date the subscription or lease was entered into. Each subscription payment period is considered to be separate for sales and use tax purposes. And again, that's not new for these services. That's been in existence for years and years and years in terms of, for example, leasing equipment, that sort of thing. Payment for the new taxable services with subscription periods that are due on or after July 1st, 2025, those will be subject to tax at the 3% rate. So as an example, if you are in a subscription now, the May, and if it's based on a monthly payment schedule, the May payment does not have the sales and use tax. The June payment does not, but if this subscription is one of these new taxable services, the July payment, you should see a line on the charge or the invoice that includes that new 3% tax from July payments and periods after that. Another scenario, if you've got a contractor who purchases data or IT services or publishing services after July 1st, in order to perform a service that's delivered as part of a contract that they entered into before July 1st, 2025, they must pay the 3% sales and use tax. In that instance, the contractor's cost of performance will have increased. So to put a little finer point on that example, say that you are someone who has bid and been awarded a contract, but as part of your bid, you only estimated the cost of your services. If you did not engage your subcontractors, or if you did not make the purchases that you'll need to make for performing those services, if they are among the new taxable services, and you are not contracting or engaging those until after July 1st, they will be subject to the sales and use tax because those are not contracts in progress. We got some special situations also to discuss. As I mentioned, we'll start with a couple of exemptions. We have two brand new exemptions that are applying specifically to the sale of digital or IT services and software publishing services. The first of those is the sale of cloud computing to cybersecurity businesses, and then also sales to or by certain qualified companies that are located in University of Maryland's Discovery District. And then there are a myriad of other sales and use tax exemptions that are already on the books that may apply to the sale of these new taxable services. A couple of the very most common ones, a sale for resale. And a resale is when the buyer intends to resell the taxable service in the form that the buyer has received it or is to receive the service, and they've not used the service themselves. So they're buying it, they're not changing it all, but they're reselling it exactly in the same format. And they intend to do that at the time they purchase, they intend to resell. So the tax is not applicable on a sale for resale. Also, a sale that's made to a charitable or a nonprofit tax exempt entity. The vendor is not required to charge tax if the buyer presents them with a valid exemption certificate. And the certificate can't be expired. Exemption certificates that are issued to charitable and nonprofit entities are valid for a period of 5 years, and they have to be renewed prior to expiration. Government certificates do not expire. As you can imagine, the government doesn't go out of business. So once they have an exemption certificate, that's good for an indefinite period. But it's important to understand that there should be an exemption certificate presented in order for the vendor not to charge tax. And those can be checked on our website, Maryland Taxes, or excuse me, MarylandComptroller.gov. I apologize. Next, a multiple points of use certificate may be presented by a buyer who determines at the time of sale that the service is being purchased that is for use both inside and outside of Maryland. The buyer needs to submit an application to the comptroller to use an MPU, a multiple points of use certificate. But if approved, when the buyer provides the vendor with an MPU certificate, the vendor is relieved of their responsibility to collect and remit the tax. And that'll shift the burden to the buyer to remit the use tax for use in Maryland by an affiliated group. What we're looking for to make sure is that someone is approved to use an MPU because the buyer will, that's what we're doing. We're shifting the burden to the buyer to pay the use tax. We're going to make sure that you're actually registered with us to pay the use tax. We need to know who you are and that you're going to be able to pay that. And we're going to also just confirm that the user is in compliance before they can issue any new MPU certificates. Another special situation example, if a sales and use tax rate higher than 3% could be applied to the sale of tangible personal property, a digital code, a digital product, or a taxable service, then the higher rate shall apply to the sale. That's how it was spelled out in the law. So an example of that we'd like to use is software as a service, or SaaS. Today, SaaS that's sold to an individual, it's already taxed at 6% as a digital product. And today, SaaS that's sold for an enterprise system, it is exempt from the definition of a digital product. So it's not subject to that 6% sale if it is sold, like I said, for an enterprise system. However, come July 1st, it is included in the definitions, those examples from NAICS, of software publishing and IT services. So it is subject to the 3% rate after July 1st if it's SaaS that's sold for an enterprise system. But what happens to those individuals after July 1st? Well, because it could apply to either rate for individuals, that sale of SaaS is going to remain taxable at 6%. The state did not want to forego any revenue that it was already receiving. So for individuals, it'll remain at the 6% rate. But after July 1st, for an enterprise system sale of SaaS, that will be subject to the 3% rate. All right, I think that's what I've got on my part of the presentation. So I'm going to hand you over to my very capable colleague, Michelle Mitchell, and she is going to talk to you again about Maryland Tax Connect and how you can handle your sales and use tax obligations in there. Thank you.
Thank you. Good morning. Before I get started with diving into the sales tax account, I do want to give a brief overview of what Maryland Tax Connect is for those that might not be familiar. Maryland Tax Connect is the comptroller's online service portal for business taxpayers. The agency launched the new self-service portal in February of 2024 as part of our ongoing system modernization initiative. This replaced the previous B-File web application. To date, we have over 170,000 registered users on Maryland Tax Connect. The portal offers various online services, such as applying for a business tax account, viewing business tax account information, correspondence history, as well as filing and remitting on Maryland business taxes. For anyone that hasn't filed sales tax before, for anyone that's new to filing sales tax, they will need to apply for a Maryland sales tax account using the combined registration application, as Deborah previously mentioned. This is something that can be done now for those that need to prepare to start remitting sales tax in Maryland. If they do have a sales tax account already and are already submitting, remitting sales tax in Maryland, then you do not need to apply. If you have an account, a employer withholding or any other business tax account, you do need to apply to add a Maryland sales tax account to your existing account. Those that need to begin filing, and if they are new to Maryland Tax Connect, they can begin the Maryland Tax Connect profile set up already. That's another thing that can be done to prepare to start filing Maryland sales tax. Both of these links are located on the Maryland Tax Connect homepage. They can be found in the quick links box. The combined registration application is titled Combined Registration Application. It's the third link in that quick links box. Once the application is submitted, a sales tax license is then mailed with a Maryland Central Registration number on it. That is the Maryland Tax ID that'll be used to identify that sales tax account. Filers cannot start filing sales tax in Maryland until they have been assigned a Maryland Central Registration number. They will also be mailed a Maryland Tax Connect letter containing a unique PIN. That PIN will be used to link the sales tax account to the Maryland Tax Connect profile. And once that is done, they can begin viewing account information and filing and remitting sales tax. Generally, it typically takes 3 to 5 days for the combined registration application to process. So we are advising those new filers to allow about 7 to 10 business days for processing, as well as United States Postal Service mail. Here on the next screen, I do have some additional resources that are available for Maryland Tax Connect. On the marylandcomptroller.gov website, we do have a page dedicated to Maryland Tax Connect help that can be found on the Business Tax Services page. We have additional FAQs. We also have previously recorded webinars that we hosted for anyone that needed some details on using Maryland Tax Connect. So those webinars contain additional details on the Maryland Tax Connect functionality. We also have step-by-step user guides, video tutorials available based on different needs for Maryland Tax Connect. The Maryland Tax Connect portal can be accessed by going to mdtaxconnect.gov. We also have a callback scheduling that's dedicated for anyone that needs Maryland Tax Connect assistance. The link to schedule a callback appointment for that assistance is located directly on the Maryland Tax Connect homepage as well. Anyone that needs to check the status of their combined registration application can also email central registration at marylandtaxes.gov. And you can check the status, and that is in the event that you haven't received your sales tax license within the 7 to 10 business days window. I think that concludes our portion of the webinar today. So I will turn it back over so that we can answer some of your questions.
Yeah. Thank you, Deborah and Michelle, and the whole Comptroller's team. Just, I guess, for those who may not know, I'm Grayson Wiggins. I'm the Vice President of Government Affairs for the Maryland Chamber. And just want to again thank the Comptroller's Office for partnering with us on these webinars and for their consistent responsiveness. That has really been going on since we were in the legislative session. So we do have a couple of questions that have come through on the chat. I've also had some that were sent directly to me. I think we'll start off. The first question is, does a business pay the new tech tax under the existing sales and use tax account number, or are the filings done together?
So if you are already registered for sales and use tax, you don't need to set up any new account. You'll just continue to file your sales and use tax. You will use those new lines that I showed. Those will be available with the return beginning for the July period. So you don't see those right now when you file your May or your June returns, but they will appear in Maryland Tax Connect. And you'll just fill out you have to report the amount of your sales as well as the amount of sales and use tax that's collected. And you'll report that on those new lines, but you do not need a special account just for the tech tax filing.
All right. The next question is, it's currently in the chat. Can you explain or talk a little bit more about what a Maryland buyer is? In government subcontracting, many of the primes, the prime contractors are not Maryland businesses. As an example, Mantech is the one here used in this question. Mantech International is a Herndon, Virginia corporation. The work is performed in Maryland. And many times, and I apologize, there's so many questions. I think there's more questions coming in, so it's getting moved around. But many times the work is, it sounds like performed in Maryland, but the company that it's being provided to, the prime contractor, is in Virginia. And I think this kind of aligns with another question that was sent directly to me, which is there's some discussion, I know, during session and post-session about the location of the buyer. I know the regulations use the word performed. The taxable service is a service is taxable when it's performed within the state. So could you just talk a little bit more about what a Maryland buyer is and when that tax does and does not apply and where it's performed?
Sure. And this is one of those things, it's fact specific. And if there's no additional data, then there's a presumption that these services are going to be presumed to be where the billing location is. But often, and we have an actual use. And so when there is a use, that can overcome a presumption. The presumption is basically, what do we do in the instance where we have no information about the buyer? If it's being used in Maryland, then that's the location for that buyer. And it can be certainly some of these services, many of these services can be used in more than one location. So if you are talking about, for example, software being deployed, it can be used by users who are in a Maryland location as well as elsewhere. We're talking then about making sure we're paying the tax on the portion that's allocable to Maryland. If cloud storage is used by, if it's storage for work that's taking place in Maryland, if we're having contractors performing work in Maryland, IT contractors. I don't know if there's a particular, again, I'll just direct folks, look to that list of services and then is that happening in Maryland? Chris, if there's anything you want to add on to that one.
That on that one, no, I'm looking
Okay.
ahead to some of the other questions that have been submitted in the Q&A.
So I guess before we get to the other Q&A question, there was another one that was sent directly to me in the chat that kind of touches on that multiple points of use certificate. I know, so the regs seem to indicate that the buyer needs to request authorization from the comptroller to issue a multiple points of use certificate for each transaction. Can you talk a little bit about what that's going to look like and if that's going to need to happen every time that they want to use the multiple points of use certificate?
Sure, sure. We are working fast and furiously with our IT department to get this set up. But through our service portal, we are going to have an online form where a buyer who is anticipating that their purchase will be used both in and outside of Maryland will have to, identify themselves to us as well as the vendor that they plan to present this certificate to. And importantly, at the time of sale, you anticipate this is going to be used in Maryland and outside of Maryland. And you need to be able to allocate that what is the portion that's going to be used in Maryland. We're going to ask for that at the time it's collected. Again, as I had mentioned, we're going to make sure that you are someone who is in fact registered with us so that you can in fact remit the use tax, that we don't have any other outstanding compliance issues. Not that any of you on this call would be, but for example, if we're already in the middle of, a fraud audit with somebody, we're not going to give that person, for example, the ability to purchase tax-free by them using a new MPU certificate. So it's more of a hopefully a cursory compliance check, but we do need to retain the ability to do that for fraud prevention purposes. So and so that will be something then. The comptroller gives the thumbs up. Yep, we know who you are. You're registered. You're in good standing. And then you present this certificate to the vendor. That is having that information. The vendor will do their own confirmation that, yep, there's just like they look up today. If someone's giving them a resale certificate, we have not built yet a dedicated place for the MPU confirmation, but they'll look up in that same search where they confirm a resale that someone is registered with the comptroller for resale certificates, that they are able to have an MPU, and then they are absolved of their responsibility to charge the sales tax on that invoice. So I would say look for more detailed information to come. We are, having to build this new web form and test it internally to make sure that that works. But we do want to get that up as soon as possible. It will not be, you can't use it for sales prior to July 1st. But we will have it, our intention is to have it available for the sales that are made July 1st and thereafter.
Thanks, Deborah. And I think
Yep.
that last comment you made is probably a good segue into the next question, which is, I know we've had a lot of questions come into the chamber from federal and state subcontractors. And so there's been some questions around, what is a subscription? What is a pre-existing contract? All that fun information. So the next question is for subcontractors who provide services to a prime contractor, and who then provides the services to the government. It sounds like will invoice once a month for services over the life of the contract. And the question is, if the contract was entered into prior to July 1, is it exempt for the life of the contract, or is it just the monthly invoices up to July 1st? That's a very specific question, so I understand if you guys don't
I
have
mean,
an
I think
answer right
we
now.
would look at the details of the contract if it's more in the nature of a subscription service where it is the same exact thing, just being performed for the same price every subscription billing period, be that a month, be that a quarter, be that a year. Now, if it's something that, the rate varies month to month based on like hours performed, I think that would be more of a, we would look at that more of a contractual obligation than a subscription. But I don't know that I have anything more to add
Yeah.
right now on that.
So I would just add that we've received a number of similar questions and a lot of questions about that scenario. And we are going to be publishing hopefully very soon a Q&A that's going to address some aspects of those scenarios, but it may be fact specific. So we kind of hesitate to address a hypothetical situation that may not be complete, because depending on the terms in the contract, it's difficult to give a broad answer, a one size fits all answer.
Yeah, completely understood. So the next question is, how does this sales and use tax apply to cybersecurity services that would be eligible for the Buy Maryland Cybersecurity Tax Credit? In this example, does the seller still apply the 3% tax to the service supplied?
I apologize, I'm not familiar with that particular program. But I can, the exemption is specifically, one of the new exemptions is the sale of cloud computing to cybersecurity businesses. So if the cybersecurity business is buying, if I understood the question correctly, cyber is the buyer? Is that? Did I get
They
that
weren't
right?
they weren't specific, but I
Okay.
would presume that under the example they're giving, the cybersecurity company would be the buyer.
Okay. So the cybersecurity is the buyer. The only part of their purchase that is exempt just by nature of them being a cybersecurity business would be sales of cloud computing. So the other taxable services, cybersecurity does need to pay for those. So again, other exemptions may come up if there is a resale scenario. If the cybersecurity business is making purchases specifically to resale it in the same form they receive the service and not using it themselves, then that's exempt.
Okay.
Anyone else on the comm team have anything else to add on that one?
Just that in order to give a more complete response, we'd like a little bit of time to look at all the details of that program. But I understand the overlap between these new taxable services, and it's going to impact the same industry. So appreciate that person bringing that to our attention, and we'll try to address it.
Thank you. And then the follow-up question they had, or the second part of their question, was, does this 3% tax apply to services performed directly for a federal or state agency? I think you guys have answered that. It would not apply in that situation because the federal government and the state government would be exempt.
Federal and state governments are exempt from paying the sales and use tax, so the vendor
Oh.
does not need to charge in those cases. Go ahead, Krista.
I would just add to that is, as Debbie talked about, that's an existing exemption, like a federal or state government, as well as other nonprofit entities, are exempt from paying sales and use tax. So that's not a new concept, and it wouldn't just apply to federal and state government. To the extent that a vendor is selling a service that's now taxable to a nonprofit, that nonprofit has a SUTEC, a sales and use tax exemption certificate, they would also not be required to charge sales tax on that sale.
Yeah, I'll just
And-
elaborate a little bit
Mhm.
more. In Maryland, the nonprofits that are eligible for sales and use tax exemption certificates are religious organizations, charitable organizations, and educational organizations. And then there are also certain ones spelled out in terms of the statute. And a lot of times that's things related to like military and veterans organizations, stuff like that. But those buyers will have an exemption certificate that they should present to the vendor at the time. They'll be telling you, hey, I'm exempt, don't charge the sales tax. And that applies whether they are hypothetically going to Costco to buy coffee for their organization, or if they're buying IT services. That same exemption certificate applies because the government has decided, these religious organizations or these charitable organizations, they should not have to pay sales tax in the state.
Yeah. And so the next question is, how, and this kind of takes us back to the cybersecurity question. How will that cybersecurity exemption apply? Who determines whether a company is a qualified cybersecurity business for purposes of the exemption? And what if the scope of work is detailed in the contract is only partially related to cybersecurity work?
There is a limited definition of the cybersecurity business in the statute, and we have included that in our regulations as well. I don't have that off the top of my head, but I would say if either a buyer or a vendor has any question on that, then they can certainly reach out to us at the Comptroller's office. My colleague here has just sent me a chat. A qualified cybersecurity business means an entity that's organized for profit. So it's a for-profit entity that's engaged primarily in the development of innovative proprietary cybersecurity technology. So it has to be your primary objective, or the provision of cybersecurity services. That is the definition the legislature has given us.
And for those companies who are not covered by the exemption, what is the frequency? The next question is, what is the frequency of filing for the sales and use tax? Does it need to be remitted every time there's a new payment, or can it be done yearly? Can you guys talk a little bit about that?
Sure. All accounts, when they are established, will let you know the filing frequency. It is anticipated with these services that folks will be required to file on a monthly basis based on the volume. Going off the top of my head now, but it's a relatively low threshold. I believe it's somewhere in the neighborhood of $700 a month in tax or so. But if there are less frequent sales, we'll notify the business and they will be on a quarterly filing frequency. We have very few annual filers, but most are either going to be monthly or quarterly. But we are anticipating any new registrations related to this tax to be on a monthly basis at this time. And just to go back, I guess, to elaborate a tiny bit more on that prior question where we said that they are primarily engaged, what the Comptroller's office interprets language like primarily to mean is it's a predominant test. So is that 51% of, 50.01, I guess, percent of your business? More than 50% of the business would be primarily engaged.
And I think we've covered this one already, but just to clarify, because it did come up again, if the end use, if a government contract, a federal state government contract, is being offered to a prime contractor, and then the prime contractor is utilizing services from the subcontractor under one of these NAICS codes, if the prime contractor is effectively reselling that service provided by the subcontractor back to the federal government, which is an exempt entity, would that initial transaction between the subcontractor and the prime contractor be exempt from the tax?
That is very fact specific, and it has been whether it was a sale of tangible personal property or services. If the prime is using the services of the sub, then they're going to pay the tax on that, assuming it's a new contract after July 1st, because they're contracted to deliver services. That resale exemption in that scenario is rather narrow. There cannot be any use of the service by the prime. And if they are using the service to fulfill their contractual obligations, then they would be required to pay the tax.
And is there a way for a company to get a predetermination from the comptroller's office on that, or how would they go about determining the fact-specific nature of the situation? How would they get get an interpretation, or are there any resources available to them from the comptroller's office?
Sure. If you would, if someone has those types of questions, we take those types of questions all the time. You can write to us. Email is compmdlegal@marylandtaxes.gov. And we can, depending on the level of specificity required, we can either answer that based on the information you have given us on an informal basis, or that can go all the way up to a private letter ruling request. A petition for private letter ruling is more formal, and there are specific requirements on our website of how such a petition needs to be submitted.
The next question is, will the cannabis tax take effect on the same date as the tech tax increase?
Yeah, so I left that out of this presentation because it wasn't tech related, but for sure, the tax, the sales and use tax on adult use cannabis that is currently 9%, that is going up to 12% for sales on and after July 1st of 2025. So the same, the sales tax form updates that are kicking in on July 1st, on the line where cannabis and cannabis products is reported, we also have updated the instructions to indicate that increase in the tax rate to 12% there.
And so someone asked, and I know that this is not something you guys can answer, but I think it probably segues into a different type of question. It says, will the state provide an incentive or exemption for small businesses that have to invest in additional resources to comply with this tax? So just for the viewers, the comptroller's team doesn't make those decisions. Those are the resource allocation of resources is a decision made by the Maryland General Assembly. But Deborah, if you want to talk about any additional resources that may be available for small businesses who want to find answers to their questions, and if you could restate that email address for the specific questions, we can put that in the general chat so everybody has it.
Yeah, Krista, if you don't mind, put in our email in the chat.
Will do.
And to Grayson's point, yeah, we do, the comptroller's office does not create the business incentives. Right now, the one that the comptroller's office administers that I had mentioned, we call it the collection discount as a shorthand. But it is in the statute to help folks defray some of the costs. We realize that doesn't cover all the costs of collecting and remitting the sales and use tax. So that's built into the sales tax form. So if you are filing and paying on a timely basis, per return, it's 0.09% of the gross sales and use tax there, and it's up to $500 per return that you get that sort of credit against what you have to pay. So you've collected the sales and use tax from your customers. You get to hold back up to 500% based on that calculation on the return.
And then I think the last question we have here is just generally about itemization. If you have a bundled contract where some of these covered services are being provided and others are not, if you could talk a little bit about how a business should determine whether or not the tax should apply to the entire contract or just the specific itemized services.
If there is a mix of taxable and non-taxable services, or even taxable and non-taxable products for that matter, it is up to the vendor to determine how those are portrayed. But if they are not broken out and separately stated, and there is a component that is subject to the sales and use tax, then the whole charge is subject to the tax. So it may be in folks' interest to break out those taxable from non-taxable services so that they're not having to pay too much tax. And the other thing I gave, the other example, it would also be important if there are different rates. So if there is a hardware aspect to the contract, and that might be taxable at 6%, and then some of these IT services at 3%, if it's not broken out, the higher rate's going to apply. So you might want to think about that in terms of invoicing and billing practices.
All right, thanks, Deborah. So that puts us at noon on the dot. We want to be respectful of everybody's time. I want to thank again the entire Comptroller's team. Deborah, Krista, Michelle, Matt, thank you again for your time. We will, for those listening, we will be doing this again on Friday, this Friday, 11 a.m. So we'll have similar presentation, but another opportunity for Q&A. Please join us if you have additional questions. And again, big thank you to the Comptroller's team for taking the time. This is very helpful for our business members who are working hard to make sure they're in compliance. Thank you, guys.
Thank you all.